Housing affordability across Canada is very, very hard to understand. If we are looking at the average income that somebody makes or a single family household makes, and then incorporating that into what the average prices are, a lot of it doesn't make a lot of sense at all. And depending on the province that you live in or the province that you're thinking of moving to, it makes a little bit more sense or a lot less sense. When we're talking Ontario or BC, the affordability is just gone. It's completely gone. And as you're going to see in this article that we're going to go through here on stories.com, some provinces actually are set up well. And if you have a single income, you actually do have a chance at owning a property. And then there are those provinces like Ontario and BC where even two good incomes combined for, a husband and a wife are still not really going to put yourself in a good position to buy a single family detached home. Not a lot of people who have younger kids or are starting a family want that condo, and I understand that, but depending on the province you're in, it may be your only chance at home ownership, at least as the gateway. Let's dive into the article. I'd love to hear in the comment section down below, what province are you from? What is your opinion on this wide range in affordability across the country? If you were to move from your current province, where would you go? Me personally, being in Ontario, very difficult to afford housing here. A single family home is only affordable by 40% of the population here. That is an issue. And as you're gonna see in the article, it's not gonna change anytime soon. So the article states here that housing affordability reaches the worst ever level in Canada. And the buyers in Canada may have extremely difficult conditions for some time, says Robert Ho, Assistant Chief Economist at RBC. Now, this article was just written here before the new year, so it has never been so unaffordable to own a home in Canada. Rising ownership costs, including high mortgage rates and home prices, pushed RBC's national aggregate housing affordability measure up to 2.8% in Q3, which brought it to a total of 62.5%. The increase, which is outlined in a new report from Robert Ho, Assistant Chief Economist RBC, follows two consecutive quarters of decline and has propelled the measure above previous all-time 61.2% that was reached in Q3 2022. So now we've actually seen a new high, which is difficult to wrap your head around. We've seen some of these prices and homes fluctuate so much over the last few years, but now we are seeing a new high in this category. So let's dive further into the article so we can really see what they have to say about it. Now, in the chart below, as you'll see, RBC's affordability tool measures ownership costs at percentage of median household income when the ratio falls. Affordability improves. The long-term average for aggregate measure is 41.3%. So that's the long-term average. So in January 2020 is where we saw that 42% aggregate, and now we are at that 62%. So we've seen a huge difference between January 2020 and today's current market. As you're gonna see in the chart here below, the aggregate housing, it's been pretty steady for some time, except for back in 1990. And then once that average hit rock bottom here around 2020, we saw this massive spike in ownership costs for the median average household income. The significant loss of affordability during the pandemic has shrunk the pool of home buyers in Canada. Many home buyers are priced out of the market, especially in BC and Ontario. In 2019, nearly 60% of all Canadian households could afford to own a condo based on their income. As of 2023, that share has fallen to 44.5%, and just 25% have sufficient income to buy a single family home. On a provincial basis, more than 75% of households can afford to own a home in Manitoba, Saskatchewan, and Alberta, as can more than 50% of households in Quebec, Nova Scotia, Newfoundland, and Labrador. And the figure falls below 45% in Ontario and below 33% in British Columbia. Obviously, we've got an affordability issue in Ontario and BC. These are two areas where you've got major airports. You've got a lot of immigration that goes into BC, that goes into Ontario. So you're going to have a bigger amount of people who are trying to afford specific properties, and that's going to drive your affordability up. You're also going to have more jobs in these two provinces, so you have to take all of that into consideration. But what we're seeing here is there are so many other provinces here in Canada that have affordability, and Ontario and BC, unfortunately, if you live there, a single family home is now below 27% chance of you owning that. So we have a huge discrepancy here for people who are making money and what they can actually afford in our current market conditions. So the reality of the affordability crisis plaguing the latter two provinces is distinctly starker when it comes to single family homes in Ontario. The share of households that can afford the property type is 21.7%, while the shares in BC are at 9.8%, in Alberta, New Brunswick, Manitoba, Saskatchewan, Newfoundland, and it's upwards of 50%. So here, let's take a look at the chart below here. So your Canadian average, it's around that 40%, 45%, and that's for a condo affordability. And then on the single family side of things, your Canadian average is about 22%. When you're looking at a lot of these other provinces though, you're getting closer to 60% in terms of the affordability for your single family homes based on your income coming in. And then condos, you're closer to 80% in Manitoba, Newfoundland, Saskatchewan, and Alberta. New Brunswick being no condos, so there's no data there. Looking at Ontario and BC though, you can barely get over 40% of Ontarians who can afford a condo based on their income. In BC, you're under 40%. And then this little small blue dash here, you are under 10% of people in BC who can actually afford a detached home. Now, looking at these charts here, it's kind of scary, to be honest, living in one of these two provinces, that the affordability is just so much different than it is in the other provinces here, but understandably so. Obviously, we've got larger markets, we've got higher population, we have more job availability for people. Unfortunately, 10% of people in BC and 20% of those in Ontario who can only afford a detached single-family home, that's going to be tough for some. Some people just might not be able to fit their large families in the condo space. They're going to have to really do some rejigging. And I think this is really creating a higher demand for rental markets, because if you can't afford a detached home, but you need that space, you're going to be pushed into the rental side of things. So this is where you are going to see some of these single family homes just not moving on the market. You're going to see a harder time to sell them because the affordability is just not there. If your home is priced at $1.5 to $2 million, there's not a lot of people who are able to, unfortunately, afford that in today's market. You're seeing that buyer pool is just 20% in Ontario and then 10% in BC, or just a bit under 10%. So when you are listing properties, so an agent like myself, you need to understand where these numbers are and what your buyer pool is actually like, because there is a limited buyer pool in a couple of these provinces. Now, RBC affordability measure rose in all markets in Q3, so not just Ontario and BC. Affordability reached its worst ever level in Toronto, 84.1%, Victoria 76.1%, Halifax 44.2%, and it soared to a 15-year high in Edmonton, so 36.7%, and Saskatchewan 35.7%. Affordability hovered near record high levels in Montreal, Ottawa, St. John, and Calgary may soon overtake Canada's capital as the fifth least affordable market in the country, Hogue warned. In Vancouver, an entire median household income can no longer cover the cost of owning your average home, with RBC aggregate affordability measure rising to an astounding 102.6%. Despite the significant deterioration in affordability, there is modest relief on the horizon, as Hogue expects third quarter of 2023 will prove to be the cyclical worst point for RBC's affordability measure. So this is at least some kind of positive news coming out of the article. So the RBC analyst does expect that this is the worst that we are going to see on these measures here. And hopefully we start to see these affordabilities balance themselves out just a little bit more. I don't see BC all of a sudden doubling to 20% ownership for single family homes, or Ontario going to 40%. However, these numbers should hopefully show some relief in the months coming. Now, as home prices decline and stabilize, the majority of the markets and the incomes continue to grow, affordability should start to improve. A further boost will come once the Bank of Canada starts cutting interest rates, which we believe will be around middle of 2024. Despite hopeful signs that ownership costs will decline, any improvement in affordability next year will be modest. RBC's aggregate affordability measure is forecast to fall to 56.3% by January 2025, well above the long-term average still. There's a very long way to go before affordability is meaningfully restored, Hogue says. Buyers in many of Canada's large markets will contend with extremely difficult conditions for some time. Now, what does this article essentially break down to say? Well, it's saying that the affordability issues are not going anywhere anytime soon in Canadian provinces. Now, even if you live in one of these more affordable provinces, they are still up from what your averages are and what you're used to seeing out there. So maybe you do live in Manitoba, and maybe your income hasn't gone up all that much in the last 3 to 5 years. And if that's the case, you've still seen a huge increase in what the housing values are and how much affordability has changed. As we talk about in every article, it is not just the housing either. There are so many other factors that we need to discuss, gas, food, all of the other essentials that we need to provide for our families and ourselves on a day-to-day basis. And as the economist warns here, this is not going to be a quick fix. So they're expecting it to drop to 56% by 2025, but that could be at the end of 2025, potentially. It doesn't necessarily mean it's going to be the beginning months of 2025. Also, that is still 13% above that average that we've had over the past 20 years. So keeping that in mind, it's still going to be a long haul for us to get the affordability back on track. We're probably talking 3 to 5 years before we start to see any resemblance of what we used to have in terms of housing affordability in some of these provinces that are on that ridiculous scale of 9% home ownership for single family homes. How much will those change in the near future? I think a lot of that is dependent on what the home prices do. So that's going to be controlled by what the interest rates are doing. A lot of the time here, we're seeing interest rates, if they start to drop, we might see home prices rise, which unfortunately would create a bigger disparity here for a lot of the people who are trying to get into the market because their income is not going to go up at the same point. Now, when we're talking about general affordability, yes, the interest rates might help people get into the market if they lower. Essentially, at the end of the day here, what you need to know is it's a long haul. Nothing is going to be a quick fix from what we've seen, and be prepared for it to be a slow grind to get back to any resemblance that we used to have. Let me know what you think down below in the comment section. Do you think these provinces that are crazy, out of control, so Ontario and BC, are gonna balance themselves back out a little bit, or do you think we are too far gone and that they will only create more distance between the other provinces in terms of the affordability based on the income that people are bringing in? Thank you so much for watching once again. My name is Mike Carpino. I'll see you in the next video. Bye for now.